Michael Linford is, we're going to switch gears first of all. So let's shake it off. We talked about everyday banking. Now we're going to move to the very forefront of consumer payments. Super interesting part of the world and everything that's going on. We're very lucky to have Michael Linford here, who's flown in from Texas and has a great Canadian business, which we're going to learn all about, a firm here in Canada. I think before we jump into the details, Michael, why don't we just talk a bit about you? Again, the same thing we did with Daniel. Let everyone get acquainted with you and who you are and how you got here.
Well, yeah, thank you for having me. And is Daniel impressive or what, y'all? You guys are so lucky to hear from him. I'm very fortunate to be here. I've been at a firm now for a little over 7 years, and I'm our chief operating officer. I was our chief financial officer up until about a year ago, and continue to love what we do here at a firm, and was drawn to this really kind of bold and audacious thing that our founder, Max, put out there, which is we are going to build a company that produces honest financial products, and that is a hard thing to do, and we're going to do it keeping the consumer as our North Star. We're going to be really bold and say things like, we refuse to profit off of a consumer's misfortune or their mistake, so late fees don't exist in our business. We are always trying to push the limits on what's moral. It's the first business I've been a part of where we spend as much time debating morality as we do profitability, and it's core to who we are, and the complexity that you get from that keeps us pretty dang engaged.
Yeah, well, thank you for that. So we're gonna jump in. I actually think I'm pretty interested. I think everyone here would be pretty interested in your approach to customers. I think store credit was something, when folks think about buy now, pay later, think about rain checks, you think about the evolution of what sort of buy now, pay later has been over the past 50 or 60 years and where it is now. You've taken a really unique value proposition and an approach to customers. Did you talk a bit about that? Is that embedded in the DNA? Is it just come from Max, or is it deep into the organization now?
Yeah, I mean, it's equal parts what the company is about. It's woven into the DNA of the company because the culture was established very early on. That's what we wanted to go build. Credit isn't new. Yeah. Credit is a pretty old thing. And we take for granted now what the credit card system is. We take it for granted because we live it and it's no longer new or novel. But you don't have to go that far back to where the idea of consumers accessing credit on a piece of plastic was innovative. It was new and different, and it meant a totally different way consumers were going to pay. And that part isn't broken or bad. We think that's good. Consumers should get credit. Credit's a key part of the economy.
I was worried there for a minute.
Yeah, and payment networks need to exist to facilitate those transactions. But we thought that the provision of credit, the way in which credit was being provided, left some opportunity. And we looked at the way interest got misaligned between providers of credit and the users of credit. Banks want you to revolve. They want you to carry a balance. The business model is predicated on you buying now and paying forever. They like the idea that you never get out of that. And it's in their business model. A CFO of a bank, credit card bank recently was talking about the rise in delinquencies they saw a couple of years ago and how that was going to increase revenue. And anytime that you point to a bad thing that's happening to the consumer as a good thing for your business, it's a fundamental misalignment. And so we set out to say, can we build a business that could solve a real consumer problem, can do it in an honest way, and didn't rely on the crutches that I think the credit card industry had become very reliant on. And along the way, it just became more and more clear to us that this was really a resonant thing. Consumers understood it, appreciated it, that the control consumers took away from it was really special, and that's how we got here.
And so, you've been in Canada for a little while. Can you tell us about the Canadian consumer? Can you tell us about where Canada fell in your global expansion and how Canadians are acting or reacting or evolving based on what you're seeing?
Yeah, so we have what we think is a market-leading business here in Canada. It's a very competitive market, but we think we have a leadership position here. that we got through acquisition. We bought a homegrown Canadian company, was called PayBright, and we got an awesome product, an awesome set of consumers and merchants, and an amazing team. And that same team has been deployed against the problem here. And I think the reason why it was attractive to us at the time, fun fact, we actually closed on that transaction, I think like 4 days before we launched our IPO. Some advice to any CFOs in the room: don't do that. if you're thinking about buying a big business while you're going public, don't do that. It was a hectic time, to say the least. But we were excited about the opportunity, despite the fact that we had competing priorities, because we saw so much similarity. We saw the same consumer problem. We saw the same reliance of revolving debt models on the consumer. We saw the same statistics around the level of household debt, the credit card problem that Daniel talked about. We saw that and said, yes, it's a very different country that we love and value very much, but the problem is very similar, and the data infrastructure was similar enough that we felt like we could take the leap. And all that proved to be very right. Our business has been very growthful up here in Canada, and in large part because the fundamentals of what we do is not different. We provide a better form of credit for consumers, which is solving a real problem for them. Merchants need it, consumers need it, and there's only one group of people who don't like it.
Can they coexist?
I mean, if we're successful, credit card, revolving debt won't. Right. In the very long run, I think that our job, our mission, we wake up, we want to make revolving debt go away. That's a big thing, though. In the U.S. anyway, there's $1.3 trillion of revolving credit balances. We have a long way to go. So while I do think in the very long run, our model will win out, I don't think credit cards are going away anytime soon, unfortunately.
Yeah. Fortunately for me. So we've talked about customer value proposition. We talked about the evolution of a firm. We've talked about the customer value proposition, how it's tied. We've talked about the competition and the origin story, effectively. Let's talk a bit about your go-to-market, right? So from a partnership perspective, because it's different, right? Like you're going out and you're having to build partnerships, and whether it's, the different merchants that you work with. How's that approach working? Have you evolved it post-COVID, and how's that part of the business moving for you?
Well, that's the good news for you.
Yeah.
Is that I think we have to have a very partnership-oriented mentality. The modern payment stack is so complicated with so many players that do so many important things that are actually quite hard to want to displace. And so when we think about going to market, we think about going to market in all the ways, meaning that we want to partner, we want to go direct, we want to do them both even if they're in conflict. We need payment networks, we need acquirers, we need partner banks, we need everybody in the ecosystem. The thing that we care a lot about is protecting the consumer experience, driving value for the merchant, but partners can help us do that. And so several years ago, we began getting very serious about finding ways to partner. So one of the biggest ways we did that was with Shopify, and the partnership we have with Shopify, where we together built a product that now powers Shop Pay installments in 2 countries and soon to be 3. That partnership was novel for us because we were building a product with somebody else to serve what we thought was our customer base, the merchants, and our consumers, the shoppers, the buyers on Shopify. But we knew that there wasn't going to be a way we could replicate what they had done in terms of their ability to go out and get merchants and consumers into their ecosystem. And we didn't want to wait. Impatience drove us to do that. And the same thing is true about how we think about partnerships more broadly, whether that's through acquirers and getting our product distributed through other processors or through networks. Our product today is directly integrated in the majority of cases, but we also do ride credit networks to settle transactions. And we do that because we believe that we have a controversial thing. We believe that channel conflict is a good thing for us. The product category is so nascent and the growth is so much in front of us that we're okay to have our product available directly integrated with the merchant, available with an integrated wallet at the same time, that maybe some businesses, mature businesses, might be afraid of, because why do you have two ways to get the same product? Isn't there some chance of competing margin structures or whatever? And we don't believe that. We just think it's so early that the most important thing is to give consumers as many at-bats to see your product and to get a chance to try an honest one out.
One of the unique things that we've seen, certainly from our point of view, is your use of personalization. So personalization through merchant ecosystem, channel conflict or not, directly. Personalization through your direct channels to say, hey, in this instance, for this kind of product, we'll offer this kind of offer. And it's good learning for the fintechs in the room and for those of us who are paying attention. How do you think about personalization? Is it still part of the growth strategy? Is it still part of the way you articulate the value proposition back out?
Yeah, I mean, for sure. I think, put most succinctly, I think one of our biggest assets is the trust that we have with the consumer and the data that we have about the richness and transaction history that we have in our platform. Both of those two things are really hard to replicate. It takes a long time to build the same data asset, and trust is a thing that just, you only get it if you spend a lot of time building it up, and it can be eviscerated very, very quickly. Mm-hmm. And so when you have that trust and you have that data asset, you can provide really compelling personalization. And that can be everything from how the business grew up, which is because we underwrite every transaction, we care a lot about what you're buying and where you're buying it, and can think about underwriting the transaction, not the person, but the actual transaction, which means we need to know in a very rich way what you're buying and where. But also what kind of financial products make sense for you. The two people buying the same item in the same store may need very different financial products. And our ability to serve that kind of optimized credit product, a credit offer to that consumer is obviously a big differentiator, and to bring that with the breadth of products that we have, again with the data and trust assets that we've accumulated, it's a pretty compelling result for consumers, and for merchants that shows up as more sales, right? So instead of doing the blunt object that we used to do in retail finance, where big placard, here's the offer. Disclaimer, apply within. Yeah. We can say, no, we understand where this consumer is at and what the right offer is, and can optimize that to generate really high ROIs for the merchants.
Thank you for that. So we spend a lot of time at MasterCard thinking about innovation and those in the consumer space across payments who are doing innovative things. As you look around the corner or over the horizon, Affirm's done an excellent job sort of keeping pace, maybe slightly being ahead of where the market trends are headed, and ahead of a little bit where customers or consumers are going to want your product to be. Are you seeing certain trends globally? I'm going to ask the second question to this would be like, are you seeing those same trends in Canada?
Yeah, I think one of the best thing about working at Affirm, from my perspective, is we have a founder, visionary CEO who knows where the puck is going. And I say that because I'm here in Canada. I didn't say where the ball is going. I didn't talk about pitch count. I'm talking about pucks here, okay? But also my daughter plays ice hockey, so I'm allowed to be in on it. We know where the puck is going. And we know that because we have a leadership team that's just been so involved and engaged in fintech for so long. That we see these trends playing out. And whether that's thinking about the flexible credential thing that we did in the US, which was and still is, I think, one of the most innovative things that's happened in this version of payments. Do
you want to share a little bit about that?
Yeah,
cool.
It's one of your competitors. So
it's fine. I mean, like conceptually.
Visa flexible credentials is a product that we use in the
US.
Have it too. That lets consumers let's the card earn the interchange appropriate to the transaction type, even if it's not coded to one or the other. And so we earn debit interchange, if it's a debit transaction, and credit if it's a credit, all with the same bin. And so there's a little bit of work we had to do technically, a little bit of work we had to do from a framework standpoint. But it's very interesting because it was a thing that if you had called Visa or MasterCard 5 years ago and said, here's what I want to do, you would have gotten told that it's not going to work and can't happen. And it takes a leader to know where the puck is going, to get all the right pieces stacked up, to get the banks lined up, to get the regulators lined up, to get the networks there. And it's very special and unique to be able to work with a leader who does that. And so as a technology visionary and certainly as somebody who knows where the puck is going, I think we're spending a lot of time thinking about where agentic commerce is going to go and what that means for payments more broadly.
Yeah.
Now, we're a small part of a very big story there, but we do think it's very important that people like us are thinking about how your product should show up for consumers in a world where agents are playing a bigger role in transactions. And that is a cross-border thing. That has nothing to do with what country you're in. The regulatory frameworks are going to be different. The partner ecosystems are going to be very different. But the idea that agents can play a bigger role in commerce, I think, is a global trend.
Are you starting to gear up your tech ops business teams against that problem set or the potential solution?
I think right now we're thinking about where it's going, and I think we're still, fortunately, I don't think these things are big yet, but you've seen some big announcements from the biggest players, and we think that's really just the start of this idea that consumers are going to. Obviously, the rest of AI, obviously, we've spun up a ton of effort with, but specifically with agentic commerce, I think that's something we're still figuring out exactly what's going to play, but it's a big trend.
And then for Canada, are you seeing anything specific, unique, double-clicking on Canada?
No, I mean, I think it's pretty remarkable how consistent the trends have been in the two countries despite the environment that we're in. And I think it's a reflection, again, of just how kind of fundamental the credit problem is across the borders. And really, there's no big takeaway except that it's more similar than not. And I think that is interesting.
So as you think about innovation, you think about new products, you think about agentic commerce, you think about AI, how does a firm think about balancing the needs of consumer protection? And we touched on it a little bit with Daniel too, but it's a really interesting expectation evolution that's happening in the marketplace where consumers are saying, look, with open banking all over the world and eventually here too, I own my own data. This is mine. I'm creating it. I'm creating a trail. Do you spend time thinking about it? How do you think about it? Is there anything that you could share with this audience?
Well, I mean, I think we definitely think about protecting the consumer in everything we do. Like I said at the very beginning, I think the consumer is the North Star in our business and thinking about doing what's right for them. When we think about a product, the first question we ask is it good for the consumer? And then we ask questions like, what regulatory framework does it fit within? But we start with, is it good for the consumer? Before we even ask, does the regulator understand how to do it?
Right.
Which is a bit inverted. I think some people believe if it checks box 2, then it's fine, and we don't. We think that there's certainly products out there that are regulatory, okay, even if they're not good for the consumer. And so we spend a lot of time thinking about that. We spend a lot of time thinking about how do we make sure that we're doing right by them, that we're getting them.
Good save.
Can you guys still hear me? Nope.
We might have lost a mic. Anyone? Handheld maybe?
Sorry, everybody. Invite the Texan and screws it up. Thank you. And so we spent a lot of time thinking about what's good for the consumer, and that's the North Star. And it is a very interesting time for the consumer. The world is changing so fast, and I guess that's always been true, but it just really feels like things have accelerated. And so whether it's data protection, or the fraud and what bad actors can do with the tools that are out there, or just more boilerplate things like consumers' credit profile and whether or not they're being treated fairly in the ecosystem. These are all things that we have to really think about and navigate very carefully. On open banking specifically, I think in general we're really supportive of a really robust data ecosystem. Obviously we need it. We are huge consumers of credit bureau data. We think that consumers get better products when they can share that data. We're also pretty mindful of just all the implications of that, and therefore our view and stance on all of this is doesn't really impact us. It's kind of away from us, but philosophically, we do think consumers should have a lot of agency in terms of how their information is used, and we think that, again, the conversation should start with what's good for the consumer.
Love that. So we're not going to end there. We're going to end on a really exciting, positive note. What is it that you are most excited about that you're doing? Is it agentic AI? Is it this audience 6 months from now when they think back on this conversation? Because they will. What is the one thing that you want them to take away, that you want us to take away?
You know, I was talking to our CFO a few weeks ago. We were staring at the forecast in the business, and the thing that is just so incredible about where Affirm is at is that we are getting to a really big scale point. We are getting to be really meaningful to e-commerce overall, certainly meaningful to consumers and financial services broadly. And yet the business is accelerating. In our last quarter, we were growing at north of 40%. Our compounded growth rate on GMV since we went public was like 48%. And I always like to tell people that CAGRs are lies, because when you start from a low number, you can make the CAGR look really great. The fact that we're growing at near our 5-year growth rate now, 5 years in, is just really remarkable. And I think it's just reflective of the thing I'm most excited about, which is capturing this massive opportunity. I think we are definitely going to see these trends play out over years, maybe even decades. But I think that it's a really good thing for consumers. I think consumers are getting more choice. They're getting choice for products that are better for them. And that consumer vote and voice is building a better way for consumers to get credit. It's letting merchants build better businesses, and I'm just so excited that we get to keep scaling up what is a pretty remarkable business that is hitting acceleration at this scale, which is just really unheard of, and I'm just excited that this can play out. I'm excited to see how it continues to grow here in Canada, where again we have a market leading position that's growing at a very healthy clip. I'm excited to launch in other geographies and continue to create a global footprint for Affirm.
With that, thank you, Michael. Appreciate your time. Thanks so much. So we've talked to small, growing Canadian fintechs. We've talked to a large fintech who's growing even faster. Talked about customer value proposition. We talked about products and tech. I think it's something that MasterCard is really proud to be here and to be connected to these wonderful organizations and to be in front of all of you. So if you see somebody with a MasterCard pin, ask them, talk to them about what we're doing. We're here to help you, and we want to be a part of this going forward. Okay, thank you so much.